a lot of these technologies can be applied in interesting ways. I think the big problem is not the technology itself in many cases. It's when the narrative around the technology is wrong or overstated, or you're trying to put the wrong type of energy source in the wrong area for the wrong reasons. I think that's where you get problems.
Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on Lyn Alden. Lyn, welcome to the podcast.
Thanks for having me. Happy to be here.
Awesome. Yeah. So I know you've talked about your background a little bit before. I know you were originally an engineer, but I'm curious to know more about the first time you heard about Bitcoin. Like what were your original thoughts and like do you remember that moment or period of time?
I mean, so it's a little fuzzy because it was a long time ago, but essentially, I had a friend that was mining it on her computer. This was like 2010 or so, back when you could just do that with a graphics card. And from the first time I heard about it, I thought it was really cool. I was like, I got the basics of it, and I was like, okay, this like self-contained system, and you basically, you can create new coins and get fees by mining it, and so I was like, this is a pretty cool system. And, I was really busy at the time. And so it's kind of like I thought it was neat, but didn't really do anything about it. And I always thought like, maybe I should do some mining. And then I just kind of didn't get around to it. And of course, like, the coins back then were like insane. Like they basically had no price. They were like, it, it's like the biggest ever opportunity cost of being lazy there. But anyway, um, and then like I would forget about it and I would see like, it hit the media or something like that. Like when it say it hit $1 media covered it. And, my biggest concern at the time was that someone could just copy it. And I was like, okay, so Bitcoin's scarce, but why can't you just clone it like 20 different times and then, dilute the whole market share? And in some ways, that's kind of what happened. But, um, it took me a while to really understand the implications of it. I had to kind of encounter it a number of times, and I was never one of those people that like didn't like it or said it wouldn't work. I was just kind of like, yeah, we'll see. It's cool. Um, and I think on the second or third time I came in contact, I was like, maybe I should just buy like $1,000 worth or something. And back then it was still super cheap, and I looked at like it's just kind of like it was like friction in terms of like the way that the exchange looked back then, and it was kind of known as like a sketchy industry. And I was like, am I gonna get scammed? Or I was like, I'll figure this out like next week. And then again, I just kind of like don't do it. And it was for me what what made it interesting was, I first wrote about it publicly in 2017, and that was near the peak. And I gave the whole case of why it's interesting, but again was concerned about coin dilution. And I also was at that point concerned about the sheer amount of like excess and exuberance in the space. So I was basically I'm gonna pass, and that ended up being a good decision. The whole space, is, including Bitcoin, underperformed for the next couple of years. But during that bear market, I kept watching. And when I saw the resolution of the block size war in particular, it was a really strong test for Bitcoin's immutability. And I also saw that Bitcoin's network effect at this point really matters. Basically, anyone can copy Bitcoin or make their own crypto, but you can't replicate the node network. You can't replicate the hash rate. You can't replicate the development that happens on top of it, the surrounding ecosystem. And so the combination of seeing that test of its immutability and, in my view, hitting a certain network effect and scale really kind of pushed it over the line and in my view made it so that whatever the right position to have in it, I think the answer is not zero.
Yeah, I think that makes a lot of sense. I think many intelligent people, when they first find Bitcoin, they need a few touches and need a few narratives or different research to really understand it and figure out why it's important. And I think, even back then when you originally learned about it the first time, there just wasn't much good research or good, narratives around what Bitcoin even is. It's hard to find. But I think that was, great background story. We are filming this on 2 p.m. on Wednesday, and we'll release it on Friday. But I did see the Fed just announce a 75 bips hike. Do you have any, quick comment on that?
Well, that was in line with expectation. And so obviously we're doing this now, so I'm not paying attention to the news headlines. But yeah, 75 is in line with expectations. I think what will be interesting is what Powell says in the press, because people are wondering the bigger question, the more uncertain question is, are they going to talk about tapering the rate of hiking? Right, they're still going to hike, but are they going to, maybe start doing 50 basis point hikes going forward, or are they going to stick with very, very hawkish language? It's kind of the sad day of our times where the whole world stops and here's what like, one guy says that like him and his council of like elders are going to do with the price of money, and it has global implications, not just U.S. implications. But that's a state of where we kind of find ourselves in this like very analog, manual, monetary world. So it's actually kind of a funny contrast to like the automated global open network of Bitcoin. But yeah, so it's, so far no surprises.
Yeah, 100%. I do want to talk more about macro, but before we get into that, you recently published a piece on basically energy problems in the U.S. And one thing that and globally actually, one thing that I thought was very interesting in that piece was you talked about how there's actually negative energy prices in some locations and times in the U.S. and potentially all throughout the world. How does that happen?
That happens when there's too much supply relative to demand, but usually not for good reasons. It's kind of the similar reason why oil, the futures contracts, went negative in April 2020 because you suddenly had a big shutdown of demand, of lockdowns, and that oil is still flowing, and so you kind of run out of space to put it. Um, and we kind of can see that in some markets like this. And so basically, what's happening there is as you add more variable power sources to the grid, because we have solar, we have wind, we have things like that, but we don't have great storage. Batteries have been around since the 1800s, and the progress on them is pretty slow. It's very hard to make a cost-effective, energy-dense, affordable battery, especially at a utility scale. Um, you can use batteries for like, shutting power down and very briefly and then going on to a different power source. They're good for like that brief bridging, but it's hard to like store energy at utility scale for like days and then deploy it when you need it. And so as you add more variable power sources, you have this thing where, during the middle of a day, for example, all the solar panels are giving tons of power, and whereas the peak demand is often like, late afternoon, like kind of evening, when people are coming home and stuff. And so you often have a mismatch between supply and demand. And so the problem there is you have stranded energy that just gets wasted. I mean, you're generating power kind of involuntarily at the wrong time, and so it just gets dissipated. Um, and obviously, Bitcoin miners have made use of this, right? Bitcoin miners are kind of specialists at going around and finding stranded energy, right? So there's good synergy there. But outside of really, really flexible loads like that, it's really hard to use that energy. And it's also part of the kind of the narrative out there of what is the actual cost of solar and wind. They often say that solar is like the cheapest energy source. It's like, well, sure, it's the cheapest energy source at midday, you know but the question is, how do you get that power into the grid on a ongoing basis, because it's often cheap exactly when you don't want it, and then it's not available when you want it. And so negative energy pricing is actually kind of a problem that comes up. And the better way to look at it is, what is the average cost of power on that grid, and what is the uptime of that grid?
Yeah, I think those are some great points. So basically, it sounds like we have this, extreme mismatch of supply and demand for energy, and we basically have a lack of baseload energy, whether that's something that's stored in a battery or just energy that can be produced, 24/7, 365 under any conditions. What's it going to take to basically like eliminate this issue, and maybe like why has this, occurred more, now than it has in the past?
So I think there's a mismatch between perceptions and reality about where some of the technology is in terms of different energy sources, right? So, something, like three-quarters of global energy comes from hydrocarbons. And then the rest, hydro and nuclear are big chunks, and only something like 5% is wind and solar. But as wind and solar have kind of been pushed to be larger and larger parts of the grid, and there are certainly applications where they're useful. There's very hot and dry regions of the world. Rooftop solar can give you kind of more autonomy from the local grid if you have, say, rooftop solar and a battery backup, for example. So, but as they've kind of put policies ahead of technology, and you kind of like, obfuscate the costs, overstate the strengths, and get that into the grid, it's kind of caused some issues. There's also a challenge where there's not a lot of investment in the grid itself. right? So for example, California keeps having their electrical grid, parts of electrical grid face rolling brownouts. And you can imagine if you were to say 10x the number of electrical vehicles that are drawing power from that grid instead of through the gasoline distribution system we have, right? That's all now, if that starts going over the grid, that's more stress on the grid. You need more copper, you need more redundancy, you need more cables bringing that around. And so I think the short-term way out of this is frankly just there needs to be more supply of hydrocarbons, natural gas, oil, and coal, because that's what the world's currently short of, especially in certain locations. Longer term, I'd like to see a nuclear renaissance. Combination of smaller reactors and a better regulatory environment could really make nuclear come back. I mean, decades ago, it was actually pretty cheap and quick to build a nuclear plant. As there've been a handful of accidents, which there's actually, even if you add up all those accidents, the number of, even if you take the worst case scenario of not just immediate deaths, which was very, very few, but if you kind of take the high end estimates for environmental damage and what that could have caused, kind of in the region, it's like it killed fewer people than coal kills, like, every year, for example, through particulates in the air. But nuclear got that kind of increasing regulatory burden, and that now makes it almost impossible in many places of the world to build a new nuclear facility. Um, and of course, you want like safe operation. So, for example, part of why Chernobyl was so bad is they didn't even have like the shield that now is standard practice among the nuclear facilities. And so there's really bad ways to build a nuclear facility, but the modern ways and back then even the responsible ways can build safe nuclear. And so I'd like to see that combination of they've developed small modular reactors. That's been a big like a push lately. And if there were kind of easing regulatory environment, I think that nuclear can at least solve a lot of the baseload grid power. And then longer term, there's interesting things like, ocean thermal energy that I think is underexplored. There are other ways to get baseload power, but the general thing you need is that you need to have nature do as much of the storage and concentration as possible, because the more that you have to replicate with machines, the less efficient and energy dense that's going to be. And so I think that's the big theme that a lot of people are missing in the energy space.
Yeah, I definitely agree that, embracing nuclear energy is probably like the best thing that society could do. I think it would do a lot of great things. And I agree that in order for that to happen, regulations kind of need to change, or they need to maybe, decrease the amount of regulations around building nuclear power plants. And I agree that like that would be great if that happens, but like, do you think that that will actually happen? I mean, I don't know. Like in Europe, they're having major energy problems. Are they like, is most of Europe embracing nuclear power at this point, or are they still like holding back? And like, what's going to be the turning point if, obviously, I don't think they're fully embracing it completely, and neither is the U.S. Does it have to get worse before it gets better?
I think so, unfortunately. There's been some flip-flopping in Europe. So first they did not embrace it. Then they said maybe we shouldn't close down these power plants, and you see a little bit different response in each country. And also nuclear is not perfect. I mean, even in France, where they have a ton of nuclear energy, they had an issue where because of a drought, nuclear needs a lot of water for cooling, and so their rivers were quite low, and so a lot of their nuclear facilities ran into cooling issues. And so it's not even necessarily a silver bullet, but it is something that I think most countries should have as a larger part of their grid. And I think it's going to take time and pain, both for that and for another round of hydrocarbon exploration and production, which I think makes a lot of people uncomfortable. But there are just people in the world that are relying on it for their their life, and so I think it's going to take time. I think it's narratives change. So, for example, inflation hit, the idea was transitory. And then when it stuck around, the narrative changed to it's greedy corporations, it's Putin, it's XYZ. I think you're going to see a similar thing in energy where, it's like it hits, problems in Europe especially, but elsewhere. And some of the politicians will say things like, "This is why we need more wind and solar." And it's like, well, okay, give it a couple more years then. And then as this keeps grinding on, I think more and more people get dissatisfied with the current situation. They do some of their own research and they say, wait a minute, this is not working. And so over time you can change. But I think it's got to go through pain. And also regions that don't embrace it, regions that are slow to figure out their energy situation, are going to become less economically and politically relevant in this kind of Game of Thrones of geopolitics. And so it's somewhat self-correcting. If one country, wants to decommission its nuclear, and another one wants to build a bunch of it, that's probably going to affect their future economic, you know, prowess. And so I think it takes time. I think it takes learning. And again, I mean, a lot of these technologies can be applied in interesting ways. I think the big problem is not the technology itself in many cases. It's when the narrative around the technology is wrong or overstated, or you're trying to put the wrong type of energy source in the wrong area for the wrong reasons. I think that's where you get problems.
Yeah, that's, a bunch of very interesting points. I know in 2021, you basically went back or you published this idea of why you were so bullish on the energy sector broadly. I'm assuming that's probably still the case. And if so, how do you suggest, your investors or your readers get exposure to energy? Like what, assets do you like, energy ETFs, or how do you like to get exposure?
So that depends on what the investor prefers, the areas that they know. I've been using a mix. I generally invest in the equity market, so a lot of producers and transporters of oil, gas, coal, and also I'm directly investing in uranium itself. Um, Now you can also do long dated futures of, say, oil, Brent, for example, Brent crude. I think there are multiple ways to play it. One thing you have to be careful of is jurisdictional risk. And so one of the things that could actually kind of contribute to a bull market is there are a lot of politicians that want to do things like windfall taxes on oil and gas companies and kind of use them as scapegoats for inflation. Now the problem, of course, is if you look at equity returns over the past 15 years, energy companies have been terrible. There's a lot of bankruptcies when oil crashed in 2015, 2016. Then there were more bankruptcies in 2020. That was a very tough environment. No one thought to do reverse windfall taxes, bail out the oil and gas companies. But now that they're actually in a period of profitability, politicians are kind of floating ideas like nationalization or windfall taxes. And the issue there is that I mean, that's like, it seems like low-hanging fruit. It's like, okay, take from the people that are experiencing abundance and then help out. I see why politicians reach for that. But the problem is, if you're an oil and gas executive and you're determining where you want to invest, whether or not you want to bring new supply to market, now your decision making is, well, so my upside is potentially capped, but I still have all the downside risk if oil is bearish or something. So I got to be very careful about investing now. And also, I mean, there's all these like initiatives to, avoid oil and gas equities and their bonds and focus on kind of ESG approved things. So you basically increase the cost of capital for the oil and gas company. That increases the hurdle rate of a project that they'll be willing to invest in. They're more cautious and they're more self-contained, using portions of their profits to invest and not issuing a ton of debt or equity, like they did in the prior decade. And so, but the good news is that higher cost of capital means potentially higher returns for investors that are willing to go in that space. And so I think there are a lot of opportunities this decade, and it'll be volatile, but I think there'll be a lot of opportunities in oil, gas companies, transporters. I'm a little bit more cautious around uranium miners, but there are vehicles out there that you can get exposure to physical uranium itself.
Interesting. Yeah, I think that makes a lot of sense. I have one last energy question, then we can move out of this. But in your piece, you basically talked about this idea of EROI, energy return on investment. Can you explain that concept and why it's important?
So it's a difficult to measure but important variable, which is to look at an energy source and determine how much energy you have to put in order to get energy out, right? What is the multiple of that energy source? So an easy to think of example, if you want to produce oil, you need to dig a well. You need to first you need to explore. Then you need to dig a well. They need to pump it out. They need to transport it and refine it, and that takes energy. You're using oil to get more oil. And the question is, what is the multiple? And that changes over time, and it varies depending on the type of energy source, like the type of oil deposit, for example. For example, there's a very high return on on energy in, say, Saudi Arabia, and a much lower return on investment in very difficult to reach types of oil. Um, Another example would be if you want to build solar panels, first you need to go up and you need to dig up a ton of polysilicon, which is a energy intensive. Then you need to manufacture the panels and then install the panels. So there's an energy input that you have to do. And then for the next 3 decades or so, those are producing energy. And so you can do a calculation and say, okay, what is the going back as far as we can in the supply chain, how much energy are we getting out compared to what we're putting in? And generally what you see is that concentrated energy sources from nature, so that's uranium, geothermal, hydro, and hydrocarbons of various types, they generally have high energy return on investment. So you can get 30, 40, 50 or more multiple of energy for every energy you put in. Whereas generally these unconcentrated types where you're capturing the flow of energy rather than like a concentrated form, so solar, wind, biomass, those end up being much lower energy return on investment, which again doesn't make them bad in all circumstances, but it means that they have pretty significant limitations on the percentage of energy they can be, especially with current technology, and then especially in countries that are trying to grow quickly, right? So it's easier to incorporate them to various degrees if you are kind of in a more stagnant population scenario, a more stagnant kind of wealthy, slow growth scenario, but they don't work very well when you're in a impoverished, fast growing scenario, right? So for example, the United States can, for example, gradually phase out coal, add a little bit of solar to its grid. There's certain regions where wind can make sense, and especially if you use, like, say, Bitcoin miners and some batteries to kind of soothe out the variability, you can make that work. Whereas if it's in India, where they're much lower energy per capita and then much kind of more impoverished base and a much faster growth rate, they're getting most of their new energy from coal and oil. So even though they are around the margins adding some solar panel, they're really kind of focused on what is the fastest possible payback for energy. And so it really kind of comes down to what it is you're optimizing for. But high energy return on investment is a very important metric.
Right now, if you were a large, oil and gas executive or, at a large power producing company, would you be looking at, acquiring Bitcoin, like public Bitcoin miners that are under extreme duress right now, or at least scooping up maybe their mining rigs? What are your thoughts on that?
Probably as long as I had job security. So that's the thing. So there's career risk where you know the downside of something um, can make someone not do it, whereas the upside makes them do it. So, for example, why was MicroStrategy the one that kind of went all in on Bitcoin? And it's like, well, Saylor has a very large stake of the equity in the voting rights, and so he's able to operate that almost like a small business. Whereas if you have one of those big companies where the CEO owns like a quarter of 1% of the shares, and he's kind of optimizing for quarter by quarter results and something like that, it's hard to make decisions that go against certain narratives or optics. But I do think that a shrewd energy company now should be looking into Bitcoin miners, especially in this time of stress, because I think the way this is going is we're going to see more and more integration between just energy producers and Bitcoin miners, right? Because the cheapest energy is energy that you produce yourself and then it's stranded or like surplus and you don't know what to do with it. And so you can just you always have your own buyer, your own way to monetize stranded energy. And so I think that it's smart to get ahead of that.
Yeah, fully agree. I mean, I think it's like you said, other than the idea of career risk and kind of just playing it safe, it seems pretty much like a no-brainer, especially if you're, generally a Bitcoin bull. I'm curious to know kind of how you broadly think about Bitcoin adoption itself. Like Bitcoin regularly experiences, massive parabolic bull runs like 2013, 2017, 2021, and then it follows like the dark bear markets. What do you think like the catalyst for those parabolic bull runs are? Like some people argue like, okay, halvings are somewhat of a catalyst. Some people argue money printing. Some people argue like M2 money supply growth. It's highly correlated with, all three of those bull runs. Do you think it's, one of those more than the others, or do you think it's a combination of them? How do you think about those bull runs?
So I think the halving matters over time, obviously, but I don't think the timing is super useful for the specific kind of bottoms and tops of those big markets. I think liquidity is a much closer variable. I've done a lot of analysis on this. So if you look at PMI cycles, so Purchasing Managers Index, it's kind of a measure. If I look at one macro chart for a country, I want to look at its PMI, which is, Purchasing Managers Index. If it's rising, it means the economic growth rate is accelerating, and if it's falling, it means it's decelerating. And if it goes below 50, it means it's probably outright contracting. And so economies go through these ebbs and flows. And generally, Bitcoin does very good in rising PMI environments, and most risk on, quote unquote, risk on type of assets do well or better in the rising PMI environments, whereas Bitcoin generally does historically pretty poorly in falling PMI environments. And generally, the types of investments that do well there are defensive types of equities that are less economically exposed. But then when you dig in deeper, you find that liquidity corresponds heavily to PMI, and Bitcoin is even more closely associated with liquidity. And one simple way to measure that is to look at global M2, or let's say M2 of the top 5 countries, for example. Kind of pick your sample, but basically a large section of global M2, which is broad money supply, and then you denominate that in dollars. And if you chart that in rate of change terms, like year-over-year percent change, and you run that next to Bitcoin, especially in year-over-year percent of change terms, you'll see pretty strong correlation. So basically, Bitcoin has not been acting as a hedge against quote-unquote inflation like CPI, but it actually is a very, very strong hedge against global growth of broad money supply in dollar terms, and then it does poorly when that is decelerating, or especially when it's negative year over year. And that makes sense because that's kind of a liquidity driver for everything. And what determines that? There's two main variables to determine that. One is how much money printing is happening among the major powers, and then also how strong is the dollar relative to other currencies. Because when you denominate all of that in dollars, if the dollar's stronger, you can get flat M2 even if most M2s are still kind of going up. But if you put it in dollars and the dollar like went up like say 10, 15% that year, you could get a flat figure, and that's generally a bearish environment for Bitcoin. And so I generally find that to be the strongest correlation, that when money supply is growing, when liquidity is abundant, generally Bitcoin does well, pretty strong correlation. And then when that's all tightening and pulling back, that's when Bitcoin tends to struggle.
Yeah, I mean, it makes a lot of sense that it's Bitcoin is highly correlated to M2 growth rather than, CPI inflation itself. And it's interesting because I don't remember ever seeing like an M2 growth percentage chart compared to the price of Bitcoin until maybe this year. And now that I've seen it, I'm like, okay, like this makes, a lot more sense. Halvings I think are like bullish catalysts, but the M2 growth makes, a ton of sense in my opinion. I guess just moving forward, kind of given this uncertain macro environment that we're in, what are the chances that we see like another Great Recession like scenario, maybe where like U.S. equities end up, over 50% off their all-time highs? Do you think that's a high probability at this point, or a low probability?
It's not my base case, but it's a reasonable probability. But I think it'll be different than Great Recession, right? So I think this is more similar to the 1970s or the 1940s, or even the 2000s after the dot-com bubble. And it's very different in my view than 2008 or say 1929. So what 2008, what the Great Recession and the Great Depression had in common is that the implosion was mainly in private leverage and especially in banks, right? So both of those had just epic banking crashes. They were undercapitalized. They had a lot of loans relative to the monetary base, and so that was like a private sector implosion of debt. So what we're seeing now is quite the opposite, which is that banks have a very high allocation to safer assets. Obviously, it depends on the bank. There's some trouble spots in Europe, for example, but talking about say North American banks, they're much more capitalized and much more allocated as a percentage of their total assets to things like cash and treasuries compared to riskier loans or securities that can have a higher chance of defaulting nominally. And so I think that looking at 2008 is like fighting the last battle, and that there's problems now. In some ways, there's bigger problems, but they're different problems. So I think the problem now is more at the sovereign level, at the currency level, right? So Japan has too much debt, Italy has too much debt, United States has too much debt, UK has too much debt, multiple countries in the world have too much debt, and so they are in a situation where they have trouble raising rates to suppress inflation sufficiently. And so I think that a lot of the pain is going to be in bond and currency markets. We've already seen that. That's already what made this different. And that's not a great environment for like unprofitable growth stocks, right? So if you look at when you entered the 2000s decade, after you got out that bubble, you had a more inflationary, commodity-driven environment. And if you looked at the S&P 500 did terrible, but that was driven by the Nasdaq type of stocks that were crashing. Whereas if you looked at REITs, if you looked at energy companies, if you looked at kind of more value type of stocks, let's say healthcare, they generally didn't go through the same type of chaos that the technology sector did. And I think we're kind of in a similar environment where because it's more inflationary and because the challenges are more on commodities and interest rates and sovereign bonds, it's just a very different environment. It's a more stagflationary type of environment rather than like a deflationary environment. And so I think there are better analogs than the 2008 crisis.
Yeah, I think that's, very reasonable. There's kind of this sentiment now among, I think you've mentioned this before, and other macro analysts, how the Fed's basically going to, keep hiking until inflation cools down or something in the treasury market breaks. How close are to either of those? And like, which one do you think is going to happen first? And, if something in the treasury market breaks, what do you mean by that? Like, what exactly would break?
Well, so back in say March 2020, the treasury market broke. So the global economy shut down, the dollar spiked because everybody still had dollar debts, but their dollar cash flows suddenly dried up. And so that was a problem because all that debt represents demand for dollars. And so the Fed had to come out. And so one way that they handle that, if you're a country that has a lot of dollar denominated debt and you're say like your banks are about to crash, they need the dollars, you can sell some of your treasuries and then use those dollar proceeds to kind of help your economy get out of that mess. And so what happened was dollar spiked, and then there's huge forward selling pressure of treasuries, and it basically broke the treasury market. It just kind of went no bid at certain parts, especially off the run securities. And it's not because people looked at the price and said that's not the right price. It's a mechanical issue of we have treasuries for this reason. This reason happened, so now I have to sell treasuries. And we're seeing kind of a slower moving version happen now, which is that as the Fed is more hawkish than most other developed countries, as the dollar strengthens, that's generally that you're seeing a strong inverse correlation where now other countries have to trim their treasury exposure to supply themselves with dollars. And so they're basically calling in their dollar claims. And so the Fed selling treasuries, the foreign sector selling treasuries, U.S. commercial banks, due to regulations, are kind of stuffed already. They can't really buy more treasuries unless they adjust certain leverage ratios. And so the biggest balance sheets aren't buying. And then the question is, can these smaller balance sheets absorb it at these higher prices? Can these higher yields entice more of those demand to come in? And so we're seeing unusually high volatility and unusually bad liquidity in the treasury market. And it hasn't outright broken yet, but it's very strained. On the other hand, I think we are seeing some disinflationary pressures. If you look at a lot of, if you look at shipping rates, if you look at semiconductors, if you look at, there's a lot of bottlenecks that have been somewhat resolved. Um, and we're seeing disinflation around the margins. Now, the question I think is how sustainable that is, right? So that's with the U.S. Strategic Petroleum Reserve rapidly drawing down. That's with diesel near record low storage levels. That's with China still doing lockdowns and therefore suppressing its hydrocarbon usage, especially for things like jet flights and various fuels. Um, and I think that the inflation we're likely to see going forward is more energy driven. And so I think that temporarily they can get a lid on it. They've already kind of slowed it down significantly. Yeah, I think it's going to be more of a recurring issue. So I think that they can let their foot off the brake for periods of time, but then inflation is ready to come right back. And so I think you have to watch both the treasury market and the energy market if you want to have signs of inflation. I think this is going to be a pretty turbulent period.
If the Fed does end up pivoting because something in the treasury market breaks, but they pivot before inflation, drops back down to 2%. How do you think like that will be justified, more from like a political perspective? Will there be like more fiscal stimulus that are like inflation handouts, like inflation based UBI that are kind of ironic, but will more programs like that come about to help the populace while the Fed, continues pumping liquidity into the system?
I think it could be it's definitely going to be a challenge, especially because after the midterms, most polls and betting markets suggest that the government will be more split, which makes passing those types of measures more challenging, at least for the next 2 years. So we'll see what happens on that front. Um, but I think that the way the Fed would justify it is by calling it a technical issue. Um, and so, for example, in 2019, the Fed was reducing its balance sheet. They were doing quantitative tightening, and then out of nowhere, the repo rate broke. So the overnight kind of this interbank lending rate, it's supposed to be super low and boring. It just spiked up to like 7% overnight. It was like, and it's basically like a core plumbing issue, just sprung a leak. And the Fed jumped in within 24 hours to start providing repo liquidity. And a lot of people were confused at the time, but there were some analysts covering it and kind of predicting something like this. I think Luke Groman called it very well ahead of time. And because I was also doing my own research when it happened, um, I kind of knew what the issue was. And essentially, there was like this T-bill oversupply problem. So you kind of had a broken T-bill market in a way, but because repo funding was used to buy treasuries, it showed up in the repo market. And so my view was that the Fed was going to probably have to start buying T-bills. And then weeks later that they did, right? So I'm on the record saying that they're going to have to buy T-bills, I think. They ended up like weeks later announcing they're going to buy T-bills. And then the joke became, Powell was saying this is not QE. Um, and it's like, well, what is it then? You're buying T-bills. You were reducing your balance sheet. Now you're increasing your balance sheet. And that was before recession. That was before COVID. That was like late 2019. And so the joke was among macro investors, they would call it not QE. They're like, yeah, the Fed is doing not QE. And there's all these kind of debates at the time. It's like, oh, it's a complex technical plumbing issue. It's XYZ, and it's like, no, no, really, kind of what you're doing is you're monetizing T-bill issuance due to oversupply. Um, and so I think it'd probably be a similar thing where instead of just saying, hey, we're going to pivot and buy as many you know treasures as we want, I think it could look more like the UK situation where you say, hey, we need to do temporary intervention, or you get a situation where they adjust the SLR rules for banks to let banks buy more treasuries, or they do a program like repo programs and things like that to absorb it. You can, there's various levers they can pull. And right now, the issue is more the longer end of the curve. Right now, there's actually, in some ways, there's T-bill undersupply. So T-bills are not the issue this time around. It's the longer part of the curve. But I think it's something you have to watch over time. I think there'll be more careful with how they call it optically, and it'll be kind of marketed as like a technical issue.
If they do go about doing that and putting like this band-aid or duct tape on this technical issue, I mean, back in 2019, obviously going into 2020, it got a lot worse for both, US equities and Bitcoin. Do you expect the same? Like if the treasury market breaks and they do this not QE, is it still likely that we'll have to go lower for things like Bitcoin and US equities?
So when that happened last time, it was bullish. Generally, you'd probably expect it to be all else equal dollar bearish and kind of risk asset bullish, if that were to happen. Um, and it depends on how, I think the magnitude makes a big difference, right? If they have to do small interventions, that's less meaningful than if they have to do big interventions. Um, one way they could potentially stave that off is if they kind of slow the pace of rate hikes, the dollar index stops like screaming higher. You could get some more foreign demand for treasuries, and then the fact that they're yielding like 4% can bring in some retail investors and some asset managers and things like that. So I think they can still kind of push this problem down the road for a period of time. But I think that in one of a few ways, either the rate of change of the Fed's, uh, you know, hawkish differential compared to the rest of the world, if that starts leveling out, that should be, somewhat toppy for the dollar, at least in terms of the speed with which it goes up, which should be somewhat constructive for risk assets, and or if they have to intervene with liquidity measures. Um, but I still think at the current time, I think, I think there's certainly value out there, but I think it's especially in terms of investors that use leverage or that are concerned about volatility. I think you have to still be prepared for the next 6 months or so of volatility because they're still doing QT, they're still hiking rates. We still have a declining PMI. We still have a strong dollar. And so I think until we get more evidence that things are changing, things are still kind of defensive looking. But Bitcoin specifically, I think is it's already capitulated pretty brutally. That doesn't mean it can't go lower, but I do think it's in a value zone down here. You have like market price below realized price. You have miners capitulating. I think this is an interesting long-term entry zone. I just think you have to be careful about expectations in the next 6 months. And my base case is sideways to up. But you can certainly have policy errors or kind of disinflationary shocks that give you another leg lower.
Yeah, I definitely generally agree with that sentiment that, it's definitely a value zone for Bitcoin and probably like US equities as well, but there could be more volatility on the way. Who knows? You retweeted this very interesting graphic on Twitter, basically about how 2 centuries ago, 96% of the world population lived on less than $5 a day, and that was adjusted for inflation. So it kind of visualized like how much wealthier the world has gotten, over the last 200 years, which is pretty incredible. And a kind of a controversial question here, but do you think fiat money is possibly of what contributed to this rapid advancement, rapid, growth of the world? Or do you think is mainly just technology reaching a tipping point and freeing up time for other humans to, build other technologies, and it was just kind of a compounding process?
I think it's hydrocarbons. So going back to the prior discussion on energy return on investment, if you map human population, um, that reduction in poverty and hydrocarbon use, it's essentially the same chart, right? So we started discovering, first was coal, and then especially with oil, you started to see this massive increase in wealth, and that's because you know instead of having most of the population have to like farm to feed themselves and the others, one farmer with a tractor can do the work of 20 people, for example. And so essentially, there's like a crazy number. Like every barrel of oil is like 20,000 plus man hours of like caloric use, right? So just imagine like, and that's like, right now that's what like $90. I don't have the price in front of me, but you can get 20,000, man hours of labor essentially with $90. And that's like it tremendously beneficial for productivity. And then when you combine that with the discovery and application of electricity, using all that energy to pump water. So you basically people now have clean water. You get rid of wastewater. You bring in clean water. Um, you know, and it's some basic medical discoveries about how germs work and how to do surgery with anesthesia and things like that. A handful of technologies can just dramatically change people's lives. And so that started happening before fiat currencies. That was happening through the 1800s, for example, and it continued through the fiat currency era. But I think a lot of that was, hydrocarbon usage specifically, and just in general, the application of high energy return on investment sources.
Yeah, and in some ways that kind of comes back to Bitcoin, since Bitcoin is basically this technology on trying to incentivize more energy production and more efficient energy production. And I think, hopefully, in the next 20 years or so, we'll have another hydrocarbon like advancement in energy production that maybe, frees, not 200x or 20,000 hours, but maybe 200,000 hours for per barrel of oil or per uranium sample out of the ground.
Yeah, uranium is one of the densest of all. I mean, one little pellet, can I don't know the numbers in front of me, but it's tremendously energy dense. And there, I think like, there are people looking at the fact that we don't tap into most of our ocean's energy, for example. I think there are kind of areas of exploration. There's people looking into ways to get geothermal energy to more people that, they can go deeper and see if they can make that economical. We'll find out. I think that there are on the horizon, interesting energy sources. And I just think it takes a willingness to use them. And it takes, one of the benefits of Bitcoin is that, there's always like a kind of a guaranteed buyer. Um, and that allows you to bootstrap energy sources that might otherwise, be more challenging. And so I'm pretty optimistic long term, even though, energy scarcity is one of the scariest things that a civilization can go through. Um, and for developing countries, the biggest thing is like food scarcity, followed by energy scarcity. Whereas for developed countries, generally food's not a problem, and so energy is the biggest thing. That if you mess that up, that is a severe problem. And I think that this is going to be a challenging decade for energy, but I do think that it is solvable.
Yeah, I guess it's safe to say that the short term, doesn't look too great, but the long term is certainly very positive, hopefully.
Yeah.
One last question, and then we can go ahead and wrap it up. How do you envision the world looks in maybe 20 to 50 years, specifically around Bitcoin? Do you think of Bitcoin always being maybe like this treasury reserve asset that's only used for savings technology, or do you think it's possible that Bitcoin becomes like the go-to transactional currency between, individuals and merchants, or do you always see like maybe like fiat money like dollars or treasuries existing?
So predicting exponential things is always challenging. Um, And so I think you have to hit milestones before you then make more ambitious assumptions, right? So, it's kind of like wake me up when Bitcoin's at 10 trillion, and then we'll start talking about the next step, right? So, I think you have to kind of take things step by step. But I think that what makes Bitcoin interesting is it mixes that savings technology with that censorship, resistance, global settlement network, with things like Lightning and Fedimints and, all these different types of scaling and speed and privacy improvements on Bitcoin. I don't see a reason why it can't be used for more and more payments over time. I think there will always be some degree of custodial overlays on that for people that want that. And you can even have a country, for example, that backs its currency by it, and you know it gets integrated into payment systems. I think a lot of people will be using Bitcoin, and I don't necessarily know, the ways that they're interacting with that full stack. Um, but I think that at the very least, unless something disrupts it, I think it's going to keep growing over the long term as something that more and more people want to have some of, and then as a reserve asset, and then over a long arc of time, the way I would phrase it is, there's almost 200 countries and almost 200 currencies, and that's kind of like barter, right? I mean, and I think that there doesn't need to be that many currencies, and that over time it becomes increasingly untenable to have a lot of those currencies in a world where Bitcoin exists and is, let's say, $10 trillion market cap and is more stable, more widely held. I think that a lot of people would opt into using Bitcoin. That would kind of crowd out, starting from the periphery and moving inward, a lot of those types of currencies. And so we'll see what happens with some of the core developed currencies. I think they're going to go through a currency devaluation and a debt crisis in the next 10, 20 years. But I think as you look out really far, I think Bitcoin's the money that a lot of people are going to want to hold and then ideally to use.
Awesome. Well, I think this is a great spot to go ahead and wrap it up. Thanks so much for coming on. I think the audience will love this. Is there anywhere you want the audience to go after this? I know you have a Twitter. Anything else?
They can check out lyndalden.com, and they can also check out my Twitter at Lyn Alden Contact. And thanks for having me.
Awesome. Thanks, Len.